Hey, Josh Jelsing here, broker of record of PGS Home Loans, sitting here with Ronnie. We are talking about the differences of coming from the direct lending world to the broker world, right? And all those things. So when you're a direct lender, how long were you a direct lender before coming over to the broker world?
So I was a direct lender for 6 years before getting into the broker world.
Yeah. How many different direct lending companies did you work for?
I worked for 2 different companies.
Good.
And I thought I'd be a one company guy, to be honest.
Yeah.
And I ended up making a move after about 3.5 years.
Yep.
And stuck it out there until we ended up making the move to the broker world.
Yep. What was the final catalyst when you're a direct lender where you're like, that's it, we're making the plunge, we're taking the plunge to go to the broker side?
You know, I think I had come up against you a couple times in cross quals.
Right.
We had come across a couple other brokers, and I think for me, man, it was so much about changing the industry, truthfully.
Yep.
Because as I started to get my lenses on like what happens in the retail world, where the money goes, and like more importantly, how it impacts the client. Yep. That was it for me.
Yeah.
Right. And once I started to see like it truly is a significant gap in cost and rate.
Yeah.
I was just blown away. And I had one story specific is we had a VA client who was going to be taking this deal. It was a super expensive loan, couldn't afford it.
Yeah.
And coming over to the broker world saved him like $500 a month.
Yeah.
And for these guys at a $500,000 purchase price, it meant the world.
Totally.
And so to us, that was kind of like my light bulb of like, that's it.
And not only was that $500, a big deal as far as their loan payment, it's also could be the difference of them buying a house or not buying a house.
Absolutely.
Yeah.
Right. And on this guy's case, he legitimately cried over it. I mean, it gives me the chills to this day.
Wow.
I can't believe you guys are doing this.
Yeah.
And we ended up letting the deal go because it was the right thing to do.
Right.
And, that was it. That was the decision maker.
Yeah. Obviously, direct lenders, they want to keep their employees. They want to keep their loan officers, right? What were some of the things you were being told from your managers, district managers, regional managers, whoever, on why you should never go to the broker side and stay to the direct lending side?
Right. So just fear, right? You can't get things done quick enough. You have no control over the process. They have no technology. They can't close on time. They take 30 days. I mean, anything that you could throw out. And truthfully, coming in, I had no idea, right? And I talked to a couple agents who had bad experiences with brokers, and that's what they thought. Yeah. Right? And so it kind of was like the stigma around it. Yep. But it couldn't be further from the truth. Yeah. It's insane.
And where that comes from, I remember the turn distinctly. In 2008, when the crash came, right, when everybody's trying to shuffle around and figure out what was going on, it was a struggle for mortgage brokers. It really was. 2008 to 2010, these different wholesale lenders had to get their act together. They had to figure out how to really compete for purchase business because refis were gone at that point. Mm-hmm. And the gaps in technology, the gap in efficiencies has completely dissipated, and in some situations has actually surpassed the direct lending side.
I would say for sure. Yeah. The platforms we're using now are 10 times what they were at any of the retail banks I was at, and some of the top tier retail banks. Yeah. It's incredible what the brokers offer now.
Yep. Do you have any problems getting information, market information, updated information, loan program information now as a mortgage broker versus when you're a direct lender?
I would say I have more access to it. And I think from a loan officer perspective, I think the real reason behind it is because we have reps, right? And each one of these reps want to earn your business. Right. And so, I mean, there's never a time that I don't reach out, rarely, and I don't have a response within minutes. Yeah. I mean, everybody's really on it. They can either do it or they can't. Yep. And I think it gives us the flexibility having that quick response time to continue to look for the right deal.
Yeah, 100%. So. And I think when you're getting marketed to by 82 different lenders and they're all trying to bring their version of what they can do, you learn a lot of stuff really quick. And then how many webinars and seminars and different knowledge opportunities are you offered on a weekly basis just through the different emails?
And I think like that is amazing because you have the versatility of every bank, right? Yep. Like being in the retail space, a lot of times what happens is you get the same 5 or 6 top producers that are coming on giving out their presentations, and a lot of it just doesn't sink home with a lot of people. Right. And in this case, you have 100 people you can go to. Yeah. So.
Yeah. Could you ever see yourself going back to the direct lending world knowing what you know now?
Not a chance, man, to be honest. Before we made the move to the broker world, we wanted, like, the whole goal was to put our clients first.
Yeah.
Right. And so we didn't take it lightly. We met with everybody and anybody we could to make sure we were making the right decision. And during that time, some of the things that we were exposed to just opened my eyes up even more.
Yeah.
To just, I don't want to say crooks, but boy, it is incredible. Right. And the dynamic is different. In retail, they're looking to build a family of a team and support and give this thing to their employees, which is awesome. Mm-hmm. But again, that's at the cost of the client.
100%. So a lot of direct lending platforms, they give you the ability to broker out. Right. But what are the handcuffs that you have on, or maybe what are the downfalls of using the brokering platform within a direct lender?
Right. It was, I don't want to say that it was frowned upon, but almost, right? Because what would happen is the fear that would be pushed into you is there's no control, there's no anything. It costs more to broker it out to the client, right? And so it was very much like, don't even go that avenue.
Right.
Just keep it right here.
You needed to save a deal.
Exactly.
Right.
Exactly. And truthfully, in those 6 years, I think I had brokered out 3 non-QM loans, and that was it. Like a couple bridge loans here and there.
Yeah.
But everything was really like pushed to try to keep it within them.
Would they cut your commission as well if you were brokering?
We didn't, but on the smaller loans, like, you couldn't make anything on it. So no, it was basically you charge the client or there's nothing there.
Yeah.
So then the client's either taking a crazy payday for it or you're not.
Right.
So.
Right. And if you don't have a huge spread of lenders to go to, brokering isn't really brokering at that point.
And seeing that now is a game changer because, you could have a quote from one bank that would be, let's just say non-QM at, a point higher than another bank.
Totally.
Right. But if you didn't know that you could shop the other bank, you're offering your best to the client.
Yep. Would you ever experience where you saw the market improving? You're watching your MBS highway, right? And we know the market's improving, which means rates should be getting better. But then you go to your rate sheet and it's not getting better.
For sure.
Did you ever experience that?
I did. And my business partner, Eric, and I, we laugh about it all the time because it's like hedging, right? It's basically a way for them to ultimately like just make more money on the back end of the loan.
Right.
And as I started to learn that side of the business is when just light bulbs went off.
Yeah.
Like, man, it's just incredible.
100%.
And now, you don't see that at all. Now, and if you do, the best part is you can use another bank.
100%.
Right. And you see the spread. It's incredible.
Were you surprised on the fluctuation you saw in our pricing engine? For example, day one, or on this day, Rocket Mortgage is the best. A week later, for the exact same scenario, UWM. A week after that, Sierra Pacific. A week after that, Guild. Did that surprise you to see how when their coffers are full and they've got too many loans coming in, they got to cut back the production, so they raise the rates? How long did it take you to say, oh my gosh, that's pretty crazy?
I would say within the first couple weeks, I started to get the grasp of it because it was pretty wild to see. I thought in my mind, I would come over, I would have one solid bank that would kind of be my go-to.
Yeah.
And I do, I have one that is very competitive.
Yep.
But at the end of the day, there's handfuls of times where they're far off, right?
Yeah.
And we take it somewhere else.
100%.
But that's the benefit, you know, and that's what I tell my clients is that every single day the market is changing.
Yep.
The bigger banks are buying out the market and one day they run it and everything goes to them and the next day they may not.
Yeah.
And that's the benefit to working with someone like us, right? Because if we don't have to do that.
100%. You'll see that lender the top 2 or 3.
Right.
And all of a sudden the next week they're down at number 25.
Right. And what's scary is some of these guys have retail loan officers.
Absolutely.
And that's what I think is I'm like, so, they were top tier on Monday, but on Friday they're at the bottom of the bucket. What happened to all the clients that are on the retail side, right?
100%.
They're taking it in the pants thinking they're getting the best deal.
Absolutely.
It's crazy.
Totally agree. From a processing standpoint, you have all these different lenders, right? And each lender has their own platform. They have their own way of doing business. With your processing team, have you had a really hard time being able to utilize each and every one of those lenders? Or is it it might be a small learning curve, but for the most part, it's pretty streamlined from going from lender A to lender Z?
I would say it is, if you're prepared, it's pretty streamlined.
Yeah.
And what I mean by that is if we're on the loan officer side, we don't have our logins, we don't have our stuff set up for the banks, it can be a headache, right? Because now you're waiting, you're doing all these different things. If you're prepared and you have your list of your top 10 or 15, it's really not. Our processor, everything on the retail side has been significantly harder than it has been on the broker side. And so that, and she's super diligent, really, really good with that. And her complaints are funny on retail. She loves it on this side.
From a technology standpoint, and this is the big buzzword right now, but AI. Have you been using the AI tools for guideline research, income calculation, all of that?
We are using it for some scripting and some emails and building out some stuff for the team, and it's been amazing. We do pay for like a premium account, and it makes a world of difference. It starts to remember you. Really cool.
I've been using it for my income calculations and my guideline research. It's bonkers.
It is, huh?
What it comes up. I've had such an amazing amount of success with it over the last 30 days. I couldn't be more pumped. Coming from the direct lending side to the broker side, has speed been an issue? Closing on time, or how about this? Do you fear, or do you think it's impossible to close like a 12-day purchase loan or a 15-day purchase loan?
Speed has been incredible. I mean, I think our average CTC right now is like 7 days. We're just smashing the speed. That could be, it's just incredible how far from the truth that is. Like the speed is zero issue. You have complete control of the file. So if you move slow, the file moves slow. If you move fast, the file moves fast. So speed is no issue. I think the fastest loan we closed since we've been in the broker world was 8 days. We were at CTC, I think, by day 5. Like we were rocking and rolling. So speed has been no issue. I think that, if I had to give any feedback as far as just the broker world to each individual bank, would be to have a underwriter where we could go directly to and be able to build a relationship there. I think that's one thing that the retail space doesn't necessarily offer, but it's kind of the benefit, right? The underwriter works for them, which technically works with you.
There's only 4 underwriters at that company,
and, truth be told, can be good and bad, right? Because if you really have a good relationship with an underwriter, it may not be such a good thing, right? So.
Every platform has a weakness. Whether you're a big box bank, a direct lender, a credit union, and obviously even a mortgage broker, right? What are the weaknesses that you found for being a mortgage broker on the mortgage broker side?
Truth be told, what I just said is it. I think it would just be getting a little bit closer with those underwriters. And some of that is on me and loan officers in general to build that relationship. But truly nothing else. I mean, the area reps are amazing. They all have your back. You can go to their boss and they have your back. I just think overall the platform is great. And I'd encourage every loan officer I know to take a peek at it.
Coming from the direct lending platform to the broker platform, a lot of people, I think it's great to start your career in the direct lending platform because it's maybe more structured, you don't have as many options, and there's only one set of way to do things, right? Coming over to the broker platform, have you had any issues finding the training you need to succeed being a broker?
We have not, no, not at all. And I think you're dead on with being at a retail spot. I think the biggest key to it is they pay you a W-2. Right. So if you're not performing, you really can't work there. And so I think for a new loan officer, the benefit to that is you kind of have to get up and get going. Right? If you want a job, you got to work. Where I do see on the broker world, if you're 1099, you're your own business. And so you don't have that pressure, which I think can, push some people out a little bit.
Obviously, when you're a W-2 employee, right? Super simple to do your taxes. But you also see how much taxes come out of that pay stub and how much you're paying. What has been the difference for you, now that you've got a couple years on the broker side, of being a W-2 employee and getting whacked on taxes versus being self-employed, corporation being paid? How much are you saving in taxes alone, do you think?
Man, I would guess $50,000 to $75,000 a year. Incredible. Like the tax savings is amazing. And truly, when we first joined PGS, one of the things you said was you become a professional loan officer once you're a broker. And I kind of took that lightly at the time because I was like, I know, we know what we're doing. But it's the truth, man.
Yeah.
I mean, you really start to learn about the business, about how to manage a business, how, to do write-offs and how to do these things that ultimately save you a ton of money.
Yeah.
From the perspective of just take-home money, it's significantly better on the broker world.
Yep.
And I think like that's awesome, but that more importantly, the clients are getting a better deal.
Yeah.
Right. So not only can you make more, but the clients get a better deal.
Absolutely.
And to me, like that was like, that's it.
Yeah.
That's the gold.
Yeah.
So that's just the icing on the cake for us to do well.
Yeah.
But for them to get such a significant difference in rate and payment and terms, it's insane.
And I say this, and I know people are going to be mad at me when I say this, but I really feel that being a broker is varsity. Everything else is JV in this sense. Not because we're more talented or somehow we're smarter. That's not it at all. In the sense that you have to be able to do so much more. You are running a company, right? You're going to have your own payrolls. You're going to have this. You're going to have that. And you have the ability to grow it as much as you are, as far as you want to take it. And at the end of the day, you own it. Versus so many people in the direct lending world, I see them jumping from lender to lender, to lender, to lender. I mean, I know some loan officers that have been with 10, 12, 13 lenders.
Same.
And once you're a broker, either you just stay a broker at that broker shop or you go open up your own. That's the path.
That's the path.
Right? So it's that's always amazing to me.
And it is. And I feel like probably frustrates some people, but it's just the reality is some of it is that it's almost the easy way out, right? And unfortunately, this is where the clients get stiffed is that what they do is the retail world, right? They bring over, Josh, you're amazing. Come over. I'm going to give you a $200,000 sign-on bonus.
$1 million signing bonus.
Right. I'm going to pay you $200,000 a month for 3 months guaranteed. Right. Well, where's that money come from?
Totally.
Right. It's coming from somewhere.
Totally.
And so I think as a loan officer, it is the easy path, especially in a challenging market. You could jump ship to jump ship to jump ship, continuing to make great money.
Right.
And truly, it's all at the expense of the client.
100%. So, if you're truly out for your client, there's no better platform than the broker platform.
Absolutely.
Now, you might find better deals in other places. Like, for example, Wells Fargo or US Bank. They might be running a special that month, and their jumbo loan is going to be off the charts. If you're private banking or private banking at one of the big box banks, you're going to be able to find that jumbo loan that nobody can touch.
For sure.
So then that platform is great. But for the general, everyday, all loans out there platform, nothing beats the broker platform.
Nothing beats it. And even on that note, since we've been here, I think I've lost 3 loans over rate.
Yeah.
And I mean, that's nothing. And honestly, the 3 I probably could have cut down to get them. Right. But we kind of just made a stand not to.
Yeah.
So it's insane. I mean, the rate is no factor when it comes to that. At that point, especially if somebody's on the retail world, you're used to selling a higher rate. To be 1/8 of a point off of somebody else on the broker world is just not a big deal.
Yeah. And on the broker side, when it comes to autonomy, how much more autonomy do you have to be able to operate the way you want to operate as a broker than you do as a direct lender?
A ton. We do what we want.
Yeah.
Right. And
within compliance and guidelines and all that. Right.
In similar sense with the retail, they definitely they keep you on a leash and they keep it tight.
Right.
Where I feel like in the broker world, you're on the leash, but you can kind of roam a little bit more.
Right. I think they don't want you to learn. They don't want you to learn too much.
That's just it. Yeah. They don't want you to say 100%.
Don't pull back the curtains.
Yes. Exactly.
Perfect.
Exactly.
Ronnie King, everybody. Thank you, sir. Boom.